Tesla's stock has plummeted over 8% since its highly anticipated robotaxi event. But what if I told you that now could be the perfect time to buy before the price skyrockets? While everyone's focused on the short-term dip, they're missing the bigger picture. Tesla's vision has never been clearer. If you act fast, you could ride the wave to record-breaking highs. Stick around because I'm about to explain why this could be the investment opportunity of a lifetime. The much-hyped robotaxi event was supposed to be a game-changer for Tesla, right? But instead, it left investors and the public more confused than excited. Tesla unveiled its futuristic Cybercab, an autonomous taxi with no steering wheel or pedals. Well, what did we actually learn? Not much. There was almost no technical information shared, no clear timeline for release, and no solid strategy presented. Investors were left scratching their heads, and that confusion hit Tesla's stock hard. In just 5 days after the event, the stock dropped over 8%. But here's the thing, the disappointment isn't as bad as it seems. Tesla's vision for the future is still rock solid, and that's where the real opportunity lies. Now let's talk about competition. While Tesla's Cybercab might have disappointed at the event, it's not the only player in the autonomous vehicle game. Companies like Waymo, backed by Google, are already far ahead. They're completing over 100,000 autonomous drives per week. Just last year, Waymo logged over 4.7 million miles in California alone. And it's not just Waymo. Players like Cruise, Zoox, and even Apple are all racing to dominate the autonomous vehicle market. So why is this important for Tesla investors? Because the competition is fierce, and without clear updates from Tesla, people are starting to wonder if they can keep up. But here's where things get interesting. Tesla's approach is different, and it could give them a unique edge that the competition just can't match. Tesla isn't just facing competition in the autonomous vehicle space. Right now, the company is also dealing with some serious challenges in the electric vehicle (EV) market. Tesla's revenues from their core car lineup have actually declined by 7% year over year in the second quarter of this year. And let's not forget, Tesla was the leader of the EV revolution. But now, cheaper alternatives from companies like BYD and IO, and even established giants like Ford and General Motors are grabbing market share. These new players are undercutting Tesla on price, and that's making it harder for Tesla to keep its grip on the market. But here's the thing. Elon Musk has a history of turning challenges into opportunities, and he's already setting Tesla up for a major comeback. Another big concern hanging over Tesla is its sky-high valuation. Right now, Tesla is trading at a price-to-earnings ratio of 61. To put that into perspective, Ford is trading at just 11, and even Ferrari, a luxury brand, has a multiple of 54. Investors are starting to ask if Tesla is overvalued, especially since their net profit margins are only 5.8% this year, which is pretty low compared to other companies. Ford, for example, has a margin of 3.8%, but they're not valued nearly as high. So why the premium on Tesla stock? Simple. It's Elon Musk. His vision for the future has been the driving force behind Tesla's massive valuation. But with questions about profitability, some investors are getting nervous. The key now is whether Tesla can live up to the high expectations. And that's where the future gets interesting. But despite all the short-term noise, here's the real story. Tesla's long-term vision is stronger than ever. Sure, the robotaxi event may have fallen flat, but the concept itself is revolutionary. We're talking about a service that could generate an estimated $153 billion in revenue for Tesla, potentially making up 63% of the company's valuation in the future. The global robotaxi market is expected to be worth $1.7 trillion by 2040, and Tesla's poised to grab a huge piece of that pie. Investors might be concerned now, but those who believe in the big picture see Tesla as more than just a car company. It's a tech and innovation powerhouse, and that's why the long-term potential is what really matters. As Musk himself has said, with autonomy, you get your time back, and that's a game changer. Now, let's talk about what's coming next for Tesla. It's not just the robotaxi. The highly anticipated Cybertruck is finally around the corner, and Tesla's already working on 4 new versions of its battery cells to power it. These aren't just any battery cells either. They're set to introduce dry cathode technology, which could be a game changer for Tesla's EVs. And then there's Optimus, Tesla's humanoid AI robot. While it might seem like science fiction, Optimus could represent the next generation of home automation, even being capable of doing housework or babysitting. Some investors were skeptical after the robotaxi event, but these innovations show that Tesla's pipeline is packed with potential. Products like the Cybertruck and Optimus are exactly what could reignite excitement around Tesla and push the stock to new heights. Another factor that sets Tesla apart is its strong financial position. While other companies are scrambling to raise capital, Tesla has more cash than debt on its balance sheet. This gives the company a huge advantage, providing the flexibility to continue investing in groundbreaking technologies like its robotaxi fleet and the Cybertruck. In fact, Tesla recently issued $783 million in bonds secured by automotive leases, which shows they're not just sitting on their cash. They're using it to fuel future growth, and with upcoming projects like the robotaxi and new battery technologies, this financial strength could be the key to keeping Tesla ahead of its competition. So, while the stock might be down now, Tesla's ability to innovate and adapt with a rock-solid financial base means the long-term picture looks very promising. Now, despite all the recent noise around Tesla, analysts are still bullish on the stock's future. RBC Capital recently raised their price target for Tesla from $224 to $236, pointing to the massive revenue potential of the robotaxi business. They estimate that the robotaxi market alone could be worth $1.7 trillion by 2040, and Tesla is positioned to capture a significant share of that. Even with the short-term dip, the long-term outlook has experts feeling optimistic. Tesla also reported strong third-quarter deliveries just shy of 463,000 units, which signals that demand is still robust. Analysts see this as a sign that Tesla could be on the verge of another breakout, with even higher targets expected as we head into 2025. For those paying attention, this dip could be the perfect time to get in before the stock takes off again. So, here's the bottom line. While Tesla's stock may have taken a hit after the robotaxi event, this is exactly the kind of opportunity smart investors look for. The market is focused on short-term results, but the real story is Tesla's long-term vision. Between the massive potential of the robotaxi business, groundbreaking innovations like the Cybertruck and Optimus, and Tesla's strong financial position, this company is positioned for explosive growth. Analysts are raising price targets, and demand for Tesla's vehicles remains strong. The dip we're seeing now, it's temporary. And for those who believe in Elon Musk's vision, it's the perfect time to buy. Tesla stock has always been about long-term gains. If you wait until the price skyrockets, you'll have missed the opportunity to get in on the ground floor. Remember, this is not financial advice, but if history is any guide, Tesla's future looks brighter than ever. So don't miss out on what could be a game-changing investment.